Good evening, traders. Raghee here, and I was thinking, when I was writing my update for one of the sites I do commentary, the Daily Forex Trading Edge, I had discussed a trade that we had put on in the morning chat. This is obviously quite a few hours later, but I kind of went out on a limb and I basically outlined all the reasons that I like the Euro Aussie over the Euro US, and I know that's probably a little bit of an unusual call, considering how much the US dollar went down today. When you take a look at the dollar futures, they took a pounding, and they didn't take a pounding on dollar weakness internally driven. In other words, it wasn't the dollar driving itself lower; it was the Euro's 200 pip rally at one point this morning that was driving the dollar down. And then eventually we saw the Dow kind of grudgingly, after going basically unchanged after, say, mid-morning after the European close, we saw the Dow start to rally, and that further put pressure on the dollar. And that's when we actually saw the yen start to move lower too. So the acceleration in the yen really picked up much later in the day. So it was an interesting day in terms of the early morning sentiment, which was completely euro-driven. And then later on, when we started to see that the yen started to weaken with the Dow started to accelerate, and here's the yen look. And I want you to notice just how recently the yen really did start to weaken. It trickled down lower for a good part of the morning, as you can see. I mean, just a little bit lower. Here's the 10 a.m. and moving lower. I mean, I won't say it was even putting in lower lows. But the acceleration to the downside came about 2.5 hours ago, 2.5 hours ago. So realize that this is a move in the yen that's fairly sudden. It wasn't something that was steady or even apparent early on this morning. Even the Dow's rally was pretty recent. You take a look at the way the Dow closed. Here's the INDU. We were up a good part of the morning, but we really didn't accelerate until going into the close. So the euro dominated the morning, and the dollar weakness dominated the morning, and then we had really the yen weakness and Dow strength dominate the afternoon. So really two different stories are not all tied in. With that being said, how much more can we get out of this euro? And this is where we have to talk about fundamentals a little bit, because quite frankly, if we're going to look at the euro now, I think we're looking at the euro through these two levels. And it really is more of a fade scenario. Now, I'm not saying I'm going to go ahead and fade this market, but I do want you to see ultimately where the trade is setting up. And you can see here that it's setting up really as potentially, and the stochastic, by the way, isn't helping us out at all. But what it's setting up as is a thick layer of resistance, basically between 3280, the minor psych level, and 3300, the major psych level. I like that level, that layer there, giving us some potential selling pressure that could be where the bears become a little bit more bold. I mean, it's tough to say they're going to want to step in, say, tomorrow, but I want you to think a little bit further down the line. And it's tough to say that right now because we're so fresh on this euro rally and the dollar weakness. Remember, the dollar didn't weaken on its own. It weakened because of the euro. So, following along that logic, why would the dollar strengthen? Well, the dollar starts to move on its own accord. In other words, debt ceiling issues, the question mark of what the Fed is going to do the latter part of 2013. Because remember, the Fed's already laid the groundwork for potential dollar strength. In fact, we've already seen a lot of dollar strength work its way into the market. Okay, so I don't want you thinking that the dollar strength story is over. We're in a choppy dollar environment. We're in a 2 to 4 o'clock chop on the daily time frame. The dollar rallied higher on the Fed, and today it sold off on the euro. So I think the Fed story is one that's a stickier story. It's one that I think will stay with the dollar. So when we have this kind of sell-off, it sounds funny to say I don't like to play the Euro-US here. If this was a pair firing on both cylinders, that'd be a different story. Why do I like the Euro-Aussie better? Well, let me ask you, what is the longer-term outlook for the dollar? Stability and maybe even strength? based upon the fact that the Fed may be winding down QE forever as we roll maybe into fall, even the end of summer. The Aussie has a potentially bearish backdrop. And I'm going to include the link to the article that I wrote, but I wanted to talk about the charts here because during the video we can really get a little bit more in-depth into charts. If you want to take a look at the fundamental story behind what I'm talking about, read the article link that I'm going to send with this video. I like the Euro-Aussie story because I think, technically speaking, we have a bear flag on the daily. We're long this market. I mean, we did this together in the morning chat, so we're still long this market, and I'm still enjoying a lot of movement higher. In fact, the 25-20 level is where potentially the bull flag would break. We've got a reversal here on the 60, on the 30. Yes, we have a reversal on the 240, but I don't want to commit to such a long-term time frame based upon the lack of directional bias on the daily time frame. But I think the story of potential Aussie weakness is an interesting one. Let's say the euro starts to simmer down. I think the forecast for the euro is looking pretty good. I think the forecast for the dollar is also looking pretty good. So could I potentially have kind of a duel between the euro and the US dollar? That's not out of the question at all. But the duel between the euro and the Aussie dollar becomes more interesting because I think there's a lot of expectation that by the end of this year, the Australian Central Bank, the RBA, is going to have a rate near 2%. There's an expectation that they're going to cut in March. Those expectations at some point, along with what has been just a series of very disappointing economic numbers just to kick off the year. Retail sales were disappointing. Trade balance was disappointing. Building approvals was disappointing. The only reason the Aussie is really benefiting at all are all external reasons. None of the reasons within Australia paint a pretty picture for the economy. The strong dollar is not doing the Australian economy any favors because it becomes much more difficult for exporters of iron ore and coal to be competitive. So when you consider all the reasons that the RBA might want lower interest rates to kind of kickstart housing, a lot of homeowners are waiting for lower rates before they get into a mortgage. I mean, there are these kind of issues within Australia. The issues without, not from within, but from without, those issues are all positive, but from China. Of course, China is Australia's biggest trading partner, but can China alone carry the Aussie, considering the problems within Australia, considering that there is expectations for another full percentage point cut between now and the end of the year, considering that traders are factoring in a 25 basis point cut for March. I think the central bank story alone indicates possibly more weakness for the Aussie. So even if all this optimism in the euro starts to wind down, the question then becomes, can the Aussie weakness outpace any kind of euro lethargy? So I want to kind of juxtapose the two stories. And I know a lot of people, sometimes I like to put things out there just to kind of poke people, just to kind of poke other traders and say, hey, everybody trades a euro US dollar, but are you looking at both of the individual currency stories? And this is a big part of what I talked about during the chat this morning. Individual currency stories. Can you look at the two currencies of the pair independently? That is so important. Another pair that we talked about this morning, and I think is an interesting story, and it reminds me of the Euro-Aussie fade, reminds me of it, is this Aussie-US dollar fade. Aussie-US dollar fade, because we had discussed a fade on the daily around 50.80, which is basically where we are right now. Not 50.80, 5.80, 1.0580, which is where we are right now. And then a wave reversal on the 15-minute time frame. You can even look at the 30 if you want, but the 15 or the 30, which would give us a short sell as prices with momentum move lower. So a lot of traders don't like the fade. It's an uncomfortable place to be. You kind of feel like you're picking a top, but you're picking a top within an environment where there's more expectation of exhaustion. Here you're getting in with the momentum to the downside. So for those of you that are wondering about that Aussie-US that I talked about this morning, are we seeing that right now? We are seeing actually the wave reversal happening the way we had outlined almost, 10 hours, 11 hours ago this morning. So that's happening right now in the U.S. Another question that we're going to dive into is this yen. And you're going to hear a lot about this idea of the yen having gone parabolic. The way that we measure it, the parabolic label on the yen is oftentimes very subjective. If we start to see, for our purposes, we start to see current prices accelerate away from the wave, we could say that it could be entering a parabolic phase. We ultimately, though, want to focus on the yen, remembering that we can measure this with the pip movement ranges, the PMR, the PPH, price pips per hour. And in the members area, I'll get into a much deeper look at what I'm going to do with the yen right now. I'll talk about my trade management for the ongoing Kiwi yen trade, as well as the trade management for the ongoing Euro-Aussie trade, and how we could even consider another entry on this move based upon that flag. All right, so that's tonight's video, members. We'll have more video on the yen and these in the members area, so log in. But I hope you all enjoyed this video, and you can check out the follow-up to all this back in the members area.